Here we go. We're back to the Jon Corzine hearing. I just have a chart up here of today's huge reversal on a 60-minute chart on an S&P 500. The thing about it is that I'm going to go ahead, put this back on the hearings. It'll be tape number 2. As far as watching the calls during this time, I will change my limit order. Yes, I did have a 380 limit order out, and yes, I did cancel it due to the fact that the risk out reward the upside at the moment, and that the put side continues to pay money, and the side of the market that's printing is the put options all the way across the board. The print options are paying. I repeat, the put options on Google are paying. Put options on bear is, remember that consolidation on the bear. I'm going back to the Corzine hearing, and remember, you have this hearing to learn from, but remember, all of what they're talking about could have been addressed with risk management. Now, individuals don't like risk management because they think that it doesn't need to be applied. If they apply the risk management, it avoids all of these big headaches that you'll listen from here down to the mom and pop trader.
Under severe pressure and had lost the confidence of the marketplace. I think that is distinct from the books and records. I think I have reason to believe, based on at least the reporting that occurred in our audit committees over a period of time, that our books and records weren't in a mess. But that is a question I think others will have to opine about after they look at those in retrospect. It's clear that in the last hours, the last days, there were many more transactions than typically occur.
One last question. Why did MF Global report to FINRA in late September 2010 that it didn't have any position in foreign sovereign debt when it began entering into transactions that carried European debt exposure in mid-September 2010?
Mr. Chairman, I believe, again, without checking records and without the ability to be certain on this, is it's always open to confirming with records. I think you must be reporting to looking to the month-end reports that we file with FINRA on our capital position. And in September of 2010, it is quite possible, and again, I don't have records to confirm this with, but it's quite possible that the beginning positions that we took in Euro sovereigns were on the books of one of our other subsidiaries, not in the FINRA regulated subsidiary.
My time has expired. The chair appreciates the indulgence of the ranking member and the members, and turns to the ranking member. If he would like to begin his question, we'll soon have to break for a series of votes.
Well, Mr. Chairman,
recognized.
Thank you. I wanted to follow up on a couple things, but I just, the one thing that struck me, Mr. Corzine, about your governor or senator, I don't know what to call you exactly.
A lot of people have bad names.
John, maybe, I don't know. Anyway, in your testimony about the leverage, apparently when you took over, the leverage was 37.5 to 1 or something.
Something in that neighborhood.
And you got it down to 30, and that somehow or another that's a good thing. This mentality on Wall Street, I don't get about this leverage, and I guess maybe you have to do that in order to make money, given the circumstances, I don't know, but it just seems pretty risky,
Congressman, if I might, 30-1 was a lot higher than I would have wanted to have on a sustained basis over a period of time. And I think if you review my written testimony, you will see that we were actively involved in seeking a strategic partnership with the FCM. In the last days, we actually moved to trying to sell the FCM. If that had been accomplished and we had made progress on that, we were all very hopeful that we would. That would have lowered our leverage down into the mid-teens to high teens, which was certainly the strategic objective that we wanted to get to. The challenge, and I listened to some of the earlier conversations, the challenge of running MF Global as it was organized is it was both an FCM and a broker-dealer. And those two elements posed different kinds of constraints, but one of those is it build up your leverage higher than would otherwise be the case in an organization that was just one or the other.
Well, yeah, according to your testimony, these positions or securities you never lost any money on. None of them ever defaulted.
Not
so
to this point.
Basically, what put you in trouble was when the margin call or when the FINRA required you to put up considerable more money.
The FINRA capital adjustments that we took are really different than the the liquidity issues. Those were things that we had the capital in different parts of our overall organization that we could put into the regulated subsidiary that FINRA looked at. And with not much difficulty, we were able to more than meet and run excess capital positions. You're suggesting that the RTM positions were a drag or a significant user of liquidity is true on the clearing exchanges in Europe where sovereign RTMs were cleared. On the other hand, the cause of MF Global's stress in its last few days was a combination certainly of sovereign positions, which were a concern to the marketplace. Make no mistake about that. It was also, though, the ratings downgrades and what I have tried to say in my oral statements, I think an inability for those of us in management and MF Global to convey what the losses were all about, and often got conflated with Euro sovereign positions, which there actually were no losses in.
Well, I guess we have to go vote, Mr. Chairman. I do have a few more questions.
The committee will stand in recess, and you will be back in questions when we return.
So basically, as forward looking is that this is going to be a special because as we have told our people around that there are systemic risk in Deutsche Bank and there are systemic risk in other bigger broker-dealers around the world. Not just this long-term firm here that just like Lehman Brothers and Bear Stearns and now MF Global have gone down. The Merrill Lynch debacle. Merrill went down and was bought out. The thing about it is that these bigger firms, as Mr. Corzine had clearly stated, is that risk, leverage risk that these bigger firms can take. And any kind of leveraged risk must be addressed with stop market orders, period. Whereas this way you can avoid systemic risk by addressing the overall risk management curve that you would apply. And nonetheless, it's always important that risk is first and foremost in anything that we do, whether it's the stock market, whether it's being a market maker like MMTs are in there buying and selling between the public. There is always going to be risk. However, risk must be trained. Risk must then be applicable, and submitting risk management is the key to survival in anything that we do. And the problem with the way that the world is today is nobody likes to manage the risk, but rather hold on and barter with it. As he said, I made some bad bets, and that happens in the business. But the thing about it is, once those bad decisions